good morning, and welcome to this panel. It's the longest panel I've ever seen. In terms of David, seems like miles away. The topic at hand today is FinTech, RegTech, disruption, yes, no. What are those gentlemen doing about it? And it's really an intersection, a crossroads section between various various stakeholders in this industry. And we wanted to assemble them and have different perspective from the regulators, from market infrastructure, financial institutions, and also the innovators who make this happen as well. So I'll briefly introduce them. So if I can have the slides for the introduction. So on my left, Chris Church, which is a business development manager at Digital Asset Holding. Next, David Gill, which is Director of Policy at FCA. Then Peter Randall, who is CEO at Settle. Then Chris Corrado, who is COO and CIO of the London Stock Exchange Group. And Philippe Rouault, Chief Innovation and Digital Officer, plus Digital Lab at BNP Paribas Security Services. And David Trotter, which is CEO at R3. So we have 1 hour. I'll do my best to have them talk rather than me. And I'll start immediately maybe with you, David. And we have 2 Davids and 2 Chris, so sometimes I'll yeah. So David, before we start talking about regulation or RegTech as such, can you come and share with us your position on innovation, FinTech in general, and what, as a regulator, you are doing about it?
I'll be delighted, thank you. I think probably a good place to start is what's our general approach. And the FCA has an overall objective to make markets work well. In making those markets work well, we have to have a view to consumer protection, market integrity, but also importantly, we have an objective to make competition work well or promote competition in the interest of consumers. And that to me cuts right across our interest in FinTech. I think a traditional regulator's response is to look at innovation perhaps and say, there's some risks, let's identify the risks, let's assess the risks, and let's mitigate those risks. And that is, of course, still important. I think it's absolutely right that the market should be regulated properly. But I think we also recognise and embrace the fact that innovation, while it can bring risks, it also brings positive disruption. It brings challenge to the market. It gets people to do things differently. It gets people to think differently and to engage consumers in different ways. If I take disclosure as perhaps a classic example, we've all given consumers pieces of paper sort of this thick. We know they don't read it. Technology gives you an opportunity to engage with them in different ways. Everybody walks around today, I'm glued to their mobile phone. Half of us are looking at the app halfway through the session to find out who we all are. Actually, you can get messages across far more easily, far more simply. That's innovation, and regulation should embrace that. So to do so, about 2 years ago, we launched our Innovation Hub. Our Innovation Hub is a dedicated team of people within the regulator, drawn from across the regulator. So there are policy people, there are lawyers, there are supervisors, there are authorization specialists, whose job it is to monitor the market, see what's going on, and help firms who have ideas that are genuinely in the interests of consumers. And that helps us to keep up to date. It keeps our knowledge so we can understand, and it helps us to react. So I think it's about striking a balance. If you get too much regulation or excessive barriers to entry, you can stifle things that would be good for consumers. On the other hand, we don't want to do too little and leave the risks unchecked. So finding the right balance, I think, is absolutely critical, and that's part of what our Innovation Hub does. But it does more than that. So actually, we have a range of services that we offer to firms who are looking to do things differently, and that's large and small firms. It's firms based in the UK, it's firms thinking of coming to the UK, and it's firms based in the UK who are thinking of going abroad. So we provide direct support to firms where they can have a conversation with us. It literally is a conversation. Some of that conversation may be you don't need to be regulated. In other cases, it may be look at that part of the rule book. In other cases, it may be an ongoing dialogue. We have an advice unit we've set up. The previous panel in this room was on robo-advice. That advice unit has been set up to help firms who are developing robo-advice models to understand the regulation, understand what we expect of them, and to get it right. We have a RegTech unit, and we'll talk a little bit more about that later. We've set up a smarter comms team, actually challenging firms to communicate differently with consumers, and we've seen some really excellent examples of things firms have done. And we've launched the Sandbox. And the Sandbox is the first of its kind across the globe, and was something we're very, very excited about as a safe place for firms to come and test ideas with real consumers and get genuine insights. So that's something, again, we can talk a little bit more about, but it's something I think is very important. And we're also cooperating internationally, so we have agreements with a number of regulators in different parts of the world. Because one thing we've found with fintech businesses is they don't tend to grow like traditional firms do in terms of adding product line by product line. They tend to grow with an idea and go internationally very, very fast. So we as regulators need to reflect on that.
Thank you, David. I think we'll come back to the sandbox concept later in this presentation. Chris Corrado, as CEO and CIO of the LSE Group, where do you see fintech innovation in general? We'll talk about DLT as well, but more broadly, how do you see fintech in your strategy?
Yeah, well, first and foremost, we sort of distinguish between invention and innovation. So we have a team of people, I call them emerging technology, and they're spread around the world. It's not a large team, but a very, very senior team. And they often invent things to solve problems. For example, in a matching engine for our exchanges, and how we look at big data and analytics as it pertains to managing risk, and also in the whole cognitive computing area and machine learning. So they'll leverage high-speed accelerated hardware in that context, right? To do things that we otherwise wouldn't be able to do. So kind of a small team, give them a lot of freedom. They basically all work from home. Nice job if you can get it. And they've done some really interesting things. And what they'll do is because we also own and run software companies, and we use that as a way of kind of solving internal problems. And because they're commercially focused, a lot of the problems that we're solving internally are actually problems that clients want to solve as well. So our emerging tech group helps the software companies to productize the inventions that they're coming up with, and the innovation is in how we take that invention and put it out in the market, as well as put it in internally. And of course, we've obviously been involved in the whole blockchain area. In our particular case, we're part of the Hyperledger program, working with IBM and the Linux Foundation. In fact, one of our senior engineers is one of the few code maintainers of Hyperledger. So that gives us pretty good insight. And we're learning a lot on that process, and we've developed use cases along those lines. And also we've partnered with, it just so happens, IBM Watson, again in the machine learning side. So what we've done is we've taken some algorithms from that we've worked on with IBM and an external company, implemented them in a prototype in a surveillance solution. So now we're doing things that we couldn't otherwise do for the London Stock Exchange right now, as we're prototyping. So by having that group kind of at a bit of an arm's length, they invent, we innovate by providing those solutions into products that our customers use, as well as that we use in the internal businesses, in the clearing businesses, exchanges, as well as in the analytics area as well.
Thank you, Chris. Philippe, I know you also work in operations before. Now you take responsibility for the digital strategy, I would think, at BP2S, as we say in French.
Exactly.
Can we have your view on FinTech and what does it mean for BNP Security Services, how you deal with it?
Mm-hmm. But more or less, we see fintechs as a way to accelerate on a number of ideas that could be generated by our product teams, operation teams, and we have a few project already well engaged with fintech, whereby they bring ideas and we co-prototype, co-design, potentially involving some of our clients to implement new features. If I take an example on the depository bank side, we are currently working with a fintech of there are circa 10 people, bringing artificial intelligence, optical recognition, big data to a certain extent, and they are currently prototyping a full reshape of our entire legacy platforms. now it brings a number of topics that we were not used to deal with before, such as intellectual property, equity capital, i.e. Assuming we bring all our business into this small fintech, then we need to be an actual shareholder of the company just to sustain our compliance on procurement rules. So there's a number of new topics that are arising through this cooperation, but we see this as really an acceleration of something we would not do before. We have also cooperation, and we went public with a project on distributed ledger technology with Smart Angels, equity crowdfunding company, and we built together a distributed ledger to hold securities record of corporates. And in such case, it's really a cooperation. There's no cross sharing of capital, potentially co-investment in the future, but it helps us a lot to renew the way we were doing products and businesses.
Okay. And now we'll turn to actually 3 senior people that leads the charge in distributed ledger technology. We distributed them. So we didn't set them near to each other. It's just like that. So David, if maybe you can, from your point of view, talk a bit about what you do, what are your priorities, where you are in your journey.
Thank you, Fabian. So for those of you that don't know anything about R3, R3 is a FinTech company backed and sponsored by, as of this morning, 69 of the largest global financial institutions in the world. We have a kind of overarching goal, which is to create a safe environment for regulated financial firms by building not just Corda, which is our base layer platform, but also a group of shared services called Concord, where our goal is to, working with our bank members, build a safe and secure platform that meets the very stringent requirements of regulated financial firms. We too are a member of the Hyperledger project, but our business is very, very focused on transactions in the global financial and regulated space. So we're doing a few things. We have 3 lines of business. Our first line of business is where we've married a couple old pragmatic financial guys like me with some really sharp technical guys. And we're working with the banks to, like I said, build Corda, and on top of it, the Concord platform, which we hope over time will be a very safe place and a very efficient place for folks to build apps related specifically to financial services. So that's the one area of our business. We have a lab that's ridiculously active for a small company. We've had 40 projects in our labs. We've completed 16. So we have a number of ongoing projects there. And they're usually sponsored by our members, not by R3. So a group of banks or other members will come together and sponsor projects. And hot ones now are in payments, trade finance, some OTC derivatives and clearing is also, a number of the different projects in there. And we try to use our community to build a consensus around practical solutions, understanding that this is a long game. We're trying to build things for 10, 20, or 30 years, not for the next 2 or 3 years. The lab itself holds no IP, and we proctor all the experiments. And then the third part is our product co, which is the newest part of the business, where we partner with other folks in the industry, firms like Axoni and Symbiont, and in our lab we have Iris and Chain and IBM and SGX and the like. So we're really trying to use our industry to position to accelerate understanding and adoption of these technologies. And kind of consistent with that is a stream that runs across all 3, which is pertinent to this panel, which is the regulatory side. So we've spent an extraordinary amount of time and resource and money on meeting regulators over the last year. We've met over 100 major regulators, of course, the FCA, who we're very active with, and who's one of the forward thinkers in the space. And really, we've been encouraging the regulators to get into the lab, and a number of them are, and to really understand the technology, hold off on knee-jerk regulation. From our perspective, it's a panacea, the idea of having a tamper-resistant transactions that's confirmed and reconciled in real time in the cloud and available to the regulators could save all of us in this industry tens of billions of dollars a year and make their job a lot easier. So we have a big effort there. We have people flying all over the world. The regulators do visit our offices every once in a while, but you guys are kind of used to people showing up and seeing you guys. So that's a big part of our work as well. And finally, in the lab, there is being established now a Reg Wiki. So we have a massive wiki that's available to all of our members, one specifically being developed and designed for the regulators, and a Reg testnet so they can come in and test SGX or test the IBM, blockchains and the like. So,
okay. Thank you, David. Peter, your turn.
Thank you. Thank you, Fabian. Ladies and gentlemen, good morning. It seems to me that it's actually quite important when thinking about all of this. Very mindful of the distinguished comments by the previous speakers, but it seems to me to be very important to put all this into some sort of historical context as well. And I think I'd start off by saying that about every decade or so, something quite big comes along in financial services, and particularly in technology. So if you go back to the 1970s, the big innovation in the 1970s was SWIFT. In the 1980s, it was effectively the dematerialization of stock certificates and bond certificates. They all became electronic. In the 1990s, it was kind of like RTGS systems around the world. In the year 2000, or the 2000s, noughties, if you will, that was the time, I think, ladies and gentlemen, when effectively 21st century technology got dropped into COBOL-running mainframe technology stacks in the front office. So that was the time that ICE was founded. It was the time that BATS was founded. It was the time that I was fortunate enough to found Chi-X in Europe. That was the time when effectively 21st century technology was able to provide a better customer experience at a much lower price point. I think if you'd have said to the founder of ICE back in May 2000 that less than 150 months later that he would own the New York Stock Exchange, I think the response had, he'd probably shrugged his shoulders, Mr. Sprecher, and said, yeah, sure, of course we will. I think if you'd have said to the folk at the New York Stock Exchange, you know what, there's just been a little company founded in Atlanta, Georgia, that in less than 150 months is going to own you, you'd have got a very different answer. So I think that's a very important piece to the next stage of the journey, as I see it, rather than anything else. And the journey, as I see it, ladies and gentlemen, is very straightforward. We've done 21st century technology to the front office. It's now time to do 21st century technology to the post-trade space. And that, I'm sure, leads us to the very simple conclusion that, in fact, the digital ledger, or digital ledger technology, is a proper and fitting piece of technology that can drop into that stack, doing the things that, effectively it needs to do in terms of regulatory cover, in terms of technology resilience, in terms of cryptographic security. But that's the really important piece to me. So thinking about that, I would say simply 5 things, really simple 5 things. So in order to be of any generalized use in this industry in which we all work, to be of any generalized use, a distributed ledger has got to do 5 things. The first thing it's got to be able to do is it's got to be able to operate at real-world speed. The 8 or 10 or 12 or 30 transactions a second that you see from some of the labs these days is just not sufficient. It's got to be able to do tens of thousands of transactions a second, because that's what banks do. It's got to be able to operate at real-world capacity. Now, what that means is it's got to be able effectively to do billions of transactions a day. And that's really very important, not the sort of number of transactions that you can get on some of the competition. It's got to be able to do KYC and AML as native. This is not something that you can add on later. It's got to be right there in the fabric of the product. It's equally, and very, very importantly, got to be able to move real-world assets. I just simply do not believe that there's anybody in this room that would ever accept as settlement finality a cryptocurrency. Just do not believe it. I do not believe that there's anybody in this room whose finance people would put the little link into their general ledger that would allow them to account for it. I don't believe there's any regulator in this world that would allow that to happen. And I certainly don't believe there'd be any compliance department that would do it. So it's got to be able to do real-world assets. It's got to be able to move assets that affect settlement finality. That's the critical piece. The banks pay each other in very special ways, as we all know. That means they've got to be able to move. You've got to be able to move central bank money. So that's, I think, the four things. The fifth one is even more important in many ways. And it's to try and work out this whole idea that I really strongly believe there ain't going to be just one great big pan-galactic blockchain. No, I don't think that's the case. There are going to be many different chains. Those chains are going to be able to talk to each other. Many banks will have many chains within them. Most of the time, they'll just be doing the little bit of business that they're supposed to be processing. But every now and again, they'll need to talk to each other. Ladies and gentlemen, there's a really powerful model for that already. And that powerful model is the mobile phone network. There isn't one great big pan-galactic mobile phone network. Everybody's got a slightly different contract. Everybody's got a slightly different phone agreement. But it's perfectly possible for me here in Switzerland with my Vodafone contract to speak to my daughter in the United States with her Verizon contract, because the chains can talk together. All the knitting about billing, all the knitting about who the people are and all the rest of it can be taken care of by the technology. So don't make the assumption that there's just going to be one big chain. I just simply don't believe it.
Thank you, Peter. Hopefully we solve the roaming like we are trying to solve it.
Exactly.
Chris, your turn.
Thanks, Fabian, and hi, everybody. So reflecting on this question, what are we working, what are our priorities? I think the first thing is it's incredibly busy. The pace of change in this industry is phenomenal. I think many of you maybe became very aware of the distributed ledger and blockchain probably at Sibos a year ago. Others on the panel and a few in the room perhaps a little bit earlier. I'm astounded at the pace of which this the industry is moving towards blockchain. And in terms of the company that I work for, we've done a lot of talking about this subject. Our priorities now are really about building. We have a number of customers in the public domain, ASX, DTCC, we just recently announced 6. We're building. We're building the company, we're hiring people, building out offices, but we're building a platform. Building a platform and an application, first and foremost, that will deliver to all the things that regulators are looking for. I think that's an interesting point here. As we're building these solutions for the ASX, for example, we are working hand in glove, as indeed, of course, is the ASX, because it's their regulator, the RBA and ASIC. We are building a platform that works under the current regulatory regime. I think we have to be careful not to confuse the hype and the creation of FinTech environments and regulators making it easy and simple for firms to build out this technology with the very obvious fact that regulators still want everything to work within the guidelines of a regulatory regime that exists today. And that is our primary objective at this point. In addition to that, we are focusing on a number of POCs. We are very focused at the market infrastructure space. We're not trying to boil oceans. We realize that getting something out there for everybody to see and to see the real benefits, the financial advantages, the transparency advantages, the privacy advantages of this technology is paramount and important. And on that journey, we've made some acquisitions. We recently acquired, in fact, ironically, a company in Switzerland. And one of the advantages of that company is they have a modeling language, which we now call the digital asset modeling language, designed to help people build, including ourselves, applications in the distributed ledger space. We're also very focused on, with Hyperledger too, that's one of our priorities. And in fact, it is our intent to take this digital asset modeling language and to use the Hyperledger Foundation to open source that technology. We believe that's really important in terms of promoting distributed ledger and getting the growth in the industry that is required. Open source is a very key and important part of our strategy, and it's a very important part of how this technology will grow. And those that embrace open source technology, we believe, will be the winners in this race.
Thank you, Chris. So now we've covered a bit the positions and the various approach, especially the 3, I wouldn't call you startups, except if you like it, with very different approach to DLT specifically. Maybe we can turn back to you, David. Gilles. To have your view now, more moving to RegTech and regulation. You've heard the startup coming up with new ways of doing things. How, from a regulation standpoint, you mentioned Sandbox in the opening. How do you deal with that? And maybe a second question. RegTech, if I would ask the people here to give a definition of what RegTech is, we would get lots of different answers. So if you can maybe, I'll ask the same to all of you to demystify what RegTech means.
Okay, pleasure. And perhaps I might just respond to a couple of the comments that were made a second ago. So I think, sort of, David, we do get out and about occasionally. I think in the last month I've been to 2 innovation labs and a digital garage that actually used to be a proper garage. Yeah, and I think coming to Chris's point, yes, I think it is important that FinTech's innovation works within the current regulatory framework, because the framework is there for a purpose. I know it's not quite what you were saying, but the framework is there for a purpose, so we expect firms to be governed properly. We expect the controls to be in place. Of course, you would expect that as well. Suitability is a good example. We expect advice to be suitable for a customer based on their individual circumstances, whether it's being given by an individual or whether it's being given by a computer-based algorithm. So, yes, it should work within there, but I think that's where the sandbox comes in. But also where our work on innovation comes in. So regulation also has to keep up with the times. If things are changing and things can be done better, then it needs to reflect that. So we can waive rules if we think it's appropriate to do so. We would look for customer protection in doing so. But for example, if somebody comes up with a brilliant way of finding a disclosure that works, we could turn off a rule that requires them to do it in paper, if such a rule exists anymore. The sandbox is there as an area for people to test things without perhaps the full regulatory consequences you would normally have. So I'm going to talk about this at the Inner Tribe session a little bit later, but the sandbox effectively means that we could offer firms restricted authorization and restricted permissions. So we could authorize them just for the purposes of that test, which is quicker and cheaper than going through a full process when you don't know whether the idea works. We could switch off rules. So we could waive rules if we think it's appropriate to do so. We could issue things like no enforcement action letters. So if the test goes wrong and customers lose out, we would still expect the firm to pay those customers redress, but we might not take any further action against the firm as a regulator in terms of fining them or something, for example. So there's lots of things we can do to encourage innovation, and that's very much the space that we're in. Coming back to RegTech, I think RegTech is a very important part of our work on innovation. I would describe it as effectively the interface between regulators and firms, but also the ways that firms can go about meeting regulation, if you like. So let me give you 2 examples. We've looked at a number of ways of addressing some fairly intractable problems. Firms don't like doing regulatory reporting. It costs them money. I understand that. Equally, we as regulators need data. We need to know what firms are doing. We need to know patterns in the market. We're running a tech sprint event. I think some of you may call it a hackathon. We're calling it a tech sprint. We've run one already where we looked at access and access for consumers thinking about financial inclusion. So we've got a cross-section of financial services firms, of technology firms, in a room. We locked the door for a couple of days and asked them to come up with some solutions. Now, some of those solutions are now being looked at commercially in terms of actually things that we think can be taken forward and benefit consumers. The second tech sprint that we'll be running later this year will be on regulatory reporting. So looking at ways to improve that interface of getting what information from what firms are doing to the regulator and so on. So I think that is really, really important that we do that. We also issued a call for input asking the industry what they thought around RegTech, what they thought we could and should be doing, and areas where we thought things could change. So, for example, we asked them about what role the FCA should play. We asked them about the blockers to innovation. And we got to think it was something like 350 responses with some really good ideas, some of which we can take forward for things like the tech sprints and so on. So there's a whole series of things that we're doing in that space. I think then if we look at something like distributed ledger technology, I think this is something that we're very pleased to see firms looking at what can be done. I think there's a huge area for experimentation here and for looking at ways of finding better records, for example, looking at opportunities in anti-money laundering checks and so on. I'm just scratching the surface there, but there's a whole range of things we can do. As a regulator's perspective, looking at RegTech, we would say that's great, very much encourage that. Actually, we've seen some interest in that sort of thing for the Sandbox. We're looking at some of those ideas and working with some of those firms. But actually, that's only part of it. We're interested in other forms of innovation as well. So what about utilising the cloud? A RegTech example, what about using the cloud for actually firms communicating with the regulator? So let's look at those sort of things and see what we can do. Machine learning is an interesting concept in terms of how we regulate, how we spot risks and so on. Use of APIs. You see quite a lot of talk in the UK about the use of APIs for customers in terms of encouraging them to switch banks, for example, and think about the rates of interest that they're getting. So all in all, I think RegTech is an absolutely critical part of the work that we do on regulation, and it's something that we're doing quite a lot of work on at the moment.
Okay. Chris, RegTech and regulation, how do you, in your strategy, how does that play?
Yeah. To us, it's about enabling compliance, and often it's just a better way to run a business. So, for example, what we're doing, as I mentioned earlier, in compliance with really automating the collection of data. So, we built an infrastructure. It's a Hadoop-based infrastructure to analyze a significant amount of information so that we could apply more sophisticated algorithms to detect patterns that we think are bad patterns, for example. So that's just a better way to run your business, and more efficient way to run your business as well. So there's you have to comply with certain things. There are smarter ways to run the business. We think applying machine learning and cognitive computing is a smarter way to do that. And there's other applications across, a number of different things as well. For example, cybersecurity, where we intend to apply cognitive computing to that as well. And in addition, there are other areas like stability. So predictive analytics around the stability of your operation is an important thing to do, and we think we can do that with machine learning. That, of course, really matters, in a clearing environment, right, as well as in an exchange. Even though, there might not be a specific regulation associated with an exchange, the reputational damage is significant if you have a problem. An example of a platform, at LSCG that we sell as a business is the Una Vista trade reporting platform is a really good example of, kind of a RegTech set of software that not only helps people comply, but it drops their infrastructure costs significantly if they would use a platform like that. This is something, of course, we've all been doing for a long time. There's just a ton of pressure these days because of all the regulations that have had to be implemented since the financial crisis. So there's a lot more emphasis on it, and therefore the speed and the cost of it are increasing. So we've got to be smarter about, where we spend money on this in the future.
Okay, thank you. Philippe, I think regulation and RegTech is also of importance, especially in the custodian environment, with all the responsibility that you have. How do you see that?
Absolutely. So it'd be the same as LSE. I mean, to me, RegTech is pieces of new technologies that we leverage to optimize, the way we comply with regulation. And today we integrate more or less, big data analytics coupled with natural language generation tools. And we produce actual regulatory reports in multi-language to the regulator. So it's more, how to leverage these new technologies, being more efficient on more time to market to produce regulatory reporting. On the pure blockchain side, what we wanted on our side is to be beyond, the pure sandbox. So the topic we are investing on is really an area where we felt was already compliant with at least the French regulation. Because today there's no real, as soon as a security, for instance, is not eligible to a CSD, it could be supported into a blockchain model, whereby finally the issuer act as a CSD. And we felt it was a very good use case to go live in real world, so with real asset, real investor, real issuers into a blockchain model. And this is something that will take place in end of November. So we'll have the first asset issued, settled, and safe kept into a blockchain for the private stocks.
Mm-hmm. So, David, I think as an innovator, regulation can be a friend or a foe, and maybe you can comment on that. And also from a RegTech is probably an opportunity also for you as a product creator, like for Peter and Chris as well. So can you please elaborate on that?
Yeah, I think everything we do falls into the RegTech category by definition, because we're building technology for regulated financial firms like BNP and our other members. And I think that we are hopefully a friend of the regulators, because I want everyone to kind of imagine a world where transactions could safely move from behind our firewalls to the cloud, a world where they could be reconciled immediately, where maybe only the two parties to that transaction need to know every single element, but the regulators may want to see a large part of that transaction, and industry competitors may want to be able to confirm that it was a valid transaction and a valid security by valid counterparties that qualify for AML, KYC, LEI. And then you can have a smart contract. We've talked a little bit about AI. We're talking about self-executing contracts that are very simple, that confirm transactions. We're not trying to, land a rocket vertically on a platform in the sea. These are pretty basic technologies, and they all exist today. So if we can do that, and we know that we have a tamper-resistant record of the truth from the moment of the transaction between two parties, that a regulator can have access to, that can pull that transaction, or that transaction can be pushed or propagated to that regulator. Our members, who all have massive groups of people shuffling papers to meet the exact same or very similar criteria for the FCA and other regulators around the world. And if you're a global bank, keeping track of all the different regulative regimes are very difficult. For software to track the nuances is not that hard. And so, we're looking at a world where these technologies will empower much safer financial markets. In the future, the regulators won't just, audit the books and records of a company. They can instantly, by using some simple artificial intelligence and data mining, look at any particular firm's transactions within the context of the entire market and everything that's traded in it. And so it's not just about, for us, people talk about blockchain. We're not even building a blockchain. It's a shared permission ledger. But it's really a confluence of technologies, which includes big data, cloud computing, artificial intelligence, and some really cool cryptographic maths that have been inspired by Bitcoin that allow us to reconsider how we do a lot of human-based redundant services and build software to do that. So that's what RegTech is for us. And I think it's... like I said, I've talked about how it's a panacea for regulators and for all of us, because I think it'll be much more efficient and much less expensive. And 5 years from now or 10 years from now, BNP's regulatory department and compliance group is going to be smaller and less expensive, and that's exciting for all of us.
Okay. Peter?
Yeah, I think that to the point that Dave made, we've actually built a functioning blockchain. In fact, we've built the functioning blockchain. I think it's the only one in the world at the moment that does all those things that I laid out earlier on. Now, that's really important from the perspective of going to speak to regulators, because actually it makes a big change. If all of a sudden transactions are perfectly possible to be alleged 24 hours a day, 7 days a week, that means that there has to be a change, possibly, in the way in which the regulator engages with the whole of the community. Because in the sense that you can pick up the phone any time of the day or night and phone anybody else anywhere in the world, if that's kind of like the model for what can happen in financial services with dematerialized assets like stocks and bonds and cash, then surely that sort of implies that there has to be some change in the behavior of the regulatory community. Of course it does. It seems to me quite obvious that that means that effectively, as an implication of this technology, an implication of the technology is quite clear that regulation has to move very quickly, in a sense, with the times and become almost like air traffic control. It has to be there 24 hours a day, 7 days a week. Now, okay, you can ameliorate a lot of that with big data and clever reporting and all sorts of smart data analytics. But nevertheless, these are some of the implications. That if finance is, in fact, a global industry, then things that happen in, Nihonbashi in Japan could well have an effect on Cheapside or could well have an effect on Broad Street in New York. So we've got to be very careful that when we think about the implications of RegTech and FinTech, that we also think about the actual practical, quote, sociological impact of what's going to happen there. So I think it's really important to say that.
Thank you. Chris?
I think probably 6 or 9 months ago, people would have said there are a number of barriers to the adoption of this technology, and people would have said regulation's one of them. I actually am astounded at the pace of how the regulators have embraced, from understanding, no, this isn't about a cryptocurrency, through to the benefits to the community, the benefit to the financial community, the benefits to the regulators. Some, the UK, the Singaporeans, the Canadians, and the Australians, for example, have really embraced this technology and doing everything possible to maximize the benefits for their markets. I think that's fabulous. The concern about regulators stopping this, I think, has disappeared. But I would say that we mustn't confuse the idea of innovating and stimulating innovation with the fact that regulators still want to see the markets operate in a sound and secure way. And one of the things that I think we're really excited about is how the ASX, for example, is working with their regulators and working with us to actually demonstrate how they can replace their clearing and settlement engine with a distributed ledger solution that actually meets all the existing regulation. And maybe you sacrifice one or two things in the panacea of these multiple benefits that distributed ledger will bring, but you can actually continue to operate a market using the existing rules and regulations. And I think as that gets put into place in the coming months, that will be a huge signal to the marketplace that you actually can use this technology, you can work within the existing confines, and then if you want to broaden out, you can. But first and foremost, we have to deliver a solution that works with the existing rules. And I think one of the concerns in the many conversations I've had with regulators is the unintended consequence. Well, if you can actually deliver a solution that works with in the current framework, that minimizes the unintended consequences, can prove out the technology, and as and when you want to go to the next stage, the market, the regulators will then go there.
Okay. When we talk about sandbox, and I think each of you, mentioned the word sandbox, do you think we have consensus, excuse the pun, consensus about what we mean by that at the industry level? Because there are sandbox which are more, I would say, policy-related sandbox, but technology sandbox as well. Is it going to be one sandbox? Because I see lots of sandboxes all over the place, which is lots of sand. But is there a need for better sharing what we mean by sandbox so that we don't have a proliferation of those? I know it's a bit of an unexpected question for the panel, but what's the view on that?
I'll give you a view. I think, we have designed a sandbox for the UK. We have designed it because it works within our regulatory structure. There are things that come with the sandbox that we can do that nobody else can do, for example. So we could issue a no enforcement action letter, but we can't say you won't have a no enforcement action in Australia, in the States, wherever it may be. That would be something for those individual regulators to test their regulatory appetite. In some circumstances, we also have different threshold conditions and base standards. So in the UK, firms are required to be authorised to do business and have relevant permissions. And it's a criminal offence to carry on business without that. In other jurisdictions, firms license, for example, it's a very different structure. So I think the basic concept of there being a safe space to try ideas with some regulatory comfort, but also some regulatory controls. So I really wouldn't want to present this as an area where you can just go and try anything. We're very much not in a space of looking at the Wild West. We will agree parameters for safe testing with firms. We will agree the exit strategy if the idea doesn't work, what happens to those customers. And all of these things are prime considerations. Now, I think these are prime considerations for most people who are considering sandboxes around the world. But also we as regulators talk. We have international cooperation agreements in place with Korea, with Australia, and with Singapore. So we talk about what our sandboxes are, we talk about the ideas we have, and we have arrangements in place that if you're, for example, getting support from our innovation hub, then you get a fast pass effectively into the Australian innovation hub. Doesn't necessarily mean you qualify for the sandbox. So I think that's quite a long-winded way of what I'm trying to say is I think that the concept of a sandbox I think is relatively well understood in terms of being that safe environment to test. But because of the different requirements in different jurisdictions, there have to necessarily be some differences.
Mm-hmm. What's very important on my experience internally is that the word testing is really important, i.e. Often you create a lot of expectation on the sandboxing, where people test ideas with fantastic client experience and so on. And when it's meant to be in production, back to the legacy constraints and compliance and so on, you sometimes have a kind of depreciation of what happens in reality. So it's very important that people know that it's really testing.
Okay. Somebody else want to?
Yeah, I mean, I think there are multiple ways to think about a sandbox. I think David's idea is an important one. The other way to think about it is product ideas in collaboration with customers before you would think too seriously, let's say, about the regulatory aspects of it. You know, so you have an idea, you want to evaluate it across a number of different clients and give them a place to really play around, if you will. I think that's important. That you know, different style, but complementary with I think what David mentioned.
I think as well it's actually very important from the point of view of delivering change and delivering innovation, in the sense that chief executive or a COO or CIO receives a commitment from his team saying, or her team saying, that there is a new project, it's a good idea, we think we can do it, it will make a difference, it will cut costs, it will deliver these benefits. And the prudent member of the C-suite will say, yes, that's all very well and good. What does compliance say about it? What does legal say about it? What do regulatory affairs say about it? Now, I think it's the case that, of course, you know, there are a multitude, and quite properly a multitude of arrangements, both legal and regulatory, which will affect that type of activity. But if there is the comfort that can be delivered to that decision-making process, that the compliance and legal affairs people have been along to the regulator and have been given the comfort that, in fact, this is a project which is in the sandbox, that people do know that this is that it does have these regulatory impacts. I think that would then say to the regulatory people, yes, okay, it's in the sandbox, that's quite good to go ahead. We can now pursue that. That, I think, is a really important adept of effectively, I'd say, at least the common law, which it can move very quickly. And that's really, really significant. And I think that's one of the reasons that so much innovation tends to come out of jurisdictions where you've got that flexibility.
Mm-hmm. So, Fabian, I'd add that for the FCA and other regulators, they set up a sandbox so that regulated financial firms can experiment with things like transfer of real value without worrying about money licensing and the like. So it's very progressive, and it allows us on the FinTech side to do a lot of things with our banks. I think sandboxes and the fact that a lot of our members were running an experiment on their own and maybe with the customers, kind of what inspired our lab approach. And our lab broadly runs two different types of experiments. One which makes everyone smarter. So we have most of the major FinTech companies technologies in our lab, so everyone can understand how Intel Sawtooth Lake works and how irises or chains or Axoni's software works. That's kind of designed to make everyone smarter. And then we have all other experiments are really designed to solve specific problems and ultimately become commercial products. But of course, many of them get weeded out, and we do that through community and collaboration. There's 1,300 individuals that are involved in the wiki, and 500 or so that are actively involved in these experiments. So we don't use Sandbox. Sandbox on the regulatory side allows us to do things with the technology side with regulated financial institutions that kind of push the envelope.
Okay. So maybe we are coming close to the end of the session. If next year Toronto, maybe I want to have your final thoughts, your famous last words for this year. About will we be out of the sandbox in Toronto? And in that, what are your hopes and challenges still to be addressed? So, because it's a closing statement, I'll just go from you, Chris Church, to the end.
So I think the pace is going to continue to kick up. I think if people aren't already involved in with this technology, I think they're going to miss out. The pace is faster than I've ever seen in any last 25 years in financial services. I think the one area that still has got a lot of work to be done is in the area of standardization, and I'll hat off to Swift for putting out the paper on standards. That was a great paper. I think there's still a lot more to be done, be it with standards. That there's a number of, the problem with standards is the S on the end. There's a number of standards that need to be worked on and developed, and I think organizations like Hyperledger are a very, very good place to do that. I would encourage certainly Swift to engage. I know they're a member of Hyperledger, to engage in that. We certainly are going to continue to add to Hyperledger, helping with that standardization approach, helping with the open sourcing approach. So I think the network effect, I think we're fine with. The regulatory stuff, which has been the topic of this panel, I think that's in great shape. There are some jurisdictions that are really being incredibly innovative and forward-thinking from a regulatory perspective. I think that's great. I think the one left for me is making sure that those standards get nailed, because I think it will enable the growth of this technology so that everybody can get the benefits from it. But I think the closing comment is, it's moving fast. It is real. We've moved away from the hype now. People are really building stuff, and it is real. And in Toronto, there will be, I have no doubt, good examples of where the industry is making significant benefits from leveraging this technology, and they're using it in real-world, live, scalable production.
I think I would close by saying that we take our work on innovation very, very seriously. Innovation and our work with FinTechs made it into our business plan last year as one of the 7 key themes for the organisation. And when you think about the waterfront that the FCA covers, that's quite a statement. So this is very, very important. The Innovation Hub is something that I'm personally very proud of, and I know many of my colleagues are too. I think I'd also reflect that innovation has the power to push the boundaries. It has the power to drive competition. Competition is healthy in the industry. It keeps people on their toes. It gets people to deliver things that are better for customers and consumers, which can be better all round. So that I think is very, very important. The other reflection I'd give is that there's no monopoly on good ideas. The experience we've had through running the Innovation Hub, the experience we've had of opening up Sandbox for applications, has been that we've seen firms large and small, existing and new, coming to the fore with actually really good ideas that are actually either there to be tested or to just be discussed, or they're thinking of bringing to market, or in some cases they can just do it and they don't need our help. So that's all very good, I think, and something that we should all encourage. I'd also encourage you to watch this space. I think a year from now, what will we have? Well, we will have some outputs from the first round of sandbox testing. One of the deals on going into the sandbox is that we will share learnings more broadly where we think it is right and appropriate to do so. So if there are some good ideas that can benefit the market as a whole, that's something we'll be putting some information out on. The sandbox is an experiment for us as much as it's an experiment for firms going into it. So we'll see how it works. We'll refine it. And we'll be able to report back. We'll also have the second cohort, so we're opening up to applications again in November, so we'll see what comes out of there. But I would encourage anyone who has a good idea that they think will be beneficial for the market, for consumers, front office or back office, that you need a bit of regulatory help. The Innovation Hub is there. It's open to new and existing firms, large and small, UK or international. So do please come and talk to us. Thank you.
Fabian, standards. I think somebody once said that the great thing about standards is that there's plenty to choose from. It's very important, I think, though, to understand how it is that standards that work and are implementable get written. I think that's a key point. And to my direct experience, if you go back a little bit, maybe 10, 15 years, to the time when the fixed protocol standards were developed, that was based around 3 firms. It was based around Instinet, it was based around Salomon Brothers, and it was based around Fidelity. And they had working technology that they used between the 3 of them that then they were able to get lots of benefits in terms of activity, lots of benefits in terms of the ability to standardize things. And that was very, very significant because they had a system to show people. And then they invited other people to come and join. Now, one of the things that really scares me is the idea that you could have, a multitude of financial institutions with a multitude of different jurisdictional issues, with a multitude of different takes and perspectives on things. And effectively, you would then end up with some sort of thing that looks like the lowest common denominator. We deserve a lot better in this industry. It seems to me that the best way of doing this is to go with things that really work and then take that and turn that into a standard, rather than having, 69 or 70 or 89 or 150 of the cleverest people in the world sitting around saying, we should build a standard. So that's, I think, very, very important. And I'll leave you, if I may, with just one thought. It seems to me very, very clear, very simple, that effectively distributed ledger technology will do to finance and payments what the shipping container did to world trade. It's very, very clear that that advantage of being able to standardize the shape of the box that goes on the ship allowed a lot of port efficiency, a lot of change to take place, and world trade, as we know, has grown very considerably since then. And the final point, because in fact we're only ever dealing with dematerialized assets, unless you're trading in deliverable commodities, because we're dealing with effectively dematerialized assets. If I've got a container here with $1 million in it, and a container over here with a bond in it that's worth $1 million, actually on a distributed ledger, all I have to do is swap the keys. The keys to the box is the point. It's the key piece that I'd like to leave you with. Thank you.
Chris?
Yeah, just getting back to your original question on, kind of what's likely to happen. I think that there's a ton of learning that's going to take place because you're going to see a lot of internal solutions. I've met a number of people around here that are actually experimenting with a number of internal solutions to learn and test exactly what can this technology do. And the technologist in me knows that anytime you unleash that amount of what really amounts to automation, there's a massive risk transfer from the guy who or gal that owns the business process to guess who? The technologist. And that being my core, and on the one hand, it's kind of scary, all that risk is kind of heading in my direction. On the other hand, it creates the innovation that I think that we're all looking to do. And the last thing I would leave you with, and on the surface it appears a little mundane, however, it's critical and has been critical in addressing the various waves that have occurred over the years. Instrumentation is key. Like, we've got to know when things are going wrong or things are about to go wrong in implementing this new technology and new systems. Anytime you implement new technology and new systems, stuff will go wrong that you may not have thought of, so we had better instrument and event manage this in an automated fashion so we can prevent some potential disasters from occurring.
Thank you.
So yes, so in 1 year from now, what I'd like to have is a bit more certainty on the way where we should invest, where has to be our strategy. So today we cannot sit and wait, so we need to be active. So we participate to consortium, we do due diligences on FinTech, we have prototypes, we invest in blockchain and so on. So what I'd like here in 1 year from now is to know which are the good protocols, which are the standards that need to go, so that we can have true deliveries of things that will make value to our clients.
Okay, David?
Thank you. So I think that I agree with a lot of things we've said on the panel. Chris, I agree that the pace of change is amazing and it's going to continue, which I think is very exciting. Peter, you made me nervous because I've said a million times about how the internet is blockchain and distributed ledger will be to finance what the internet was to media, and I thought that's where you were going with it. But, so thank you for.
I wouldn't steal your.
But so I think a year from now we'll see some commercial applications in the market. There will be incremental improvements on processes using the benefits of tamper-resistant records in the cloud. I don't care whether it's blockchain or distributed ledger. So that'll be very exciting. I'm hoping that we see, because the prize is so big for the industry, that we see increased collaboration, that we drive towards interoperability so that we don't live in the world we live in finance today where we have vertical IT stack solutions that communicate through kludgy APIs and cost us billions of dollars to maintain a year. I hope that everyone on the panel, my colleagues here, work together to try to solve some of those problems. So I think we'll have a lot of exciting things to talk about. It's moved beyond, is it hype, is it real? Tamper-resistant, distributed ledgers, shared ledgers, blockchain will be a big part of finance going forward. I think that's a given now, and it'll be really fun to see what we can do over the next year in making it a reality.
Thank you.
Yeah.
So I think we're really at the end. Just want to thank Chris, David, Peter, Chris, Philippe, and David for their insights. And it's a subject that is, of course, will be key in Toronto. And let's meet there to keep on the critical dialogue about this. Thank you very much.